Welcome back. Hope you're having a good Friday morning. Well, as promised, let's get straight to the stocks that we're tracking for you. Sonia, auto sales numbers, the two-wheelers, Hero MotoCorp and TVS Motors, how did they do?
Oh, very strong numbers coming in from both those players. Just to keep the context, the numbers were expected to be on the muted side, especially because TVS Motor had that whole export, weakness. But given all of that, the numbers were not bad at all. Let me start with Hero MotoCorp. Just to give you a sense of the key numbers, it was strong earnings, beat on all parameters, margins up 180 basis points on a year-on-year basis at 13%, revenue growth of almost 12%, slightly higher than estimated. The core EBITDA went up 22% at over 1,081 crores, and the margins as well, as I said, 180 basis points higher. The volume growth was also decent for Hero MotoCorp, almost 7% on a year-on-year basis. The management said that it was because of healthy recovery in urban demand, traction that they saw during Navratri, and channel filling as well. They also spoke about the commentary was positive, and I think that's something that the street will like. They expect the two-wheeler industry revenue growth to be in double digits in the coming year, and they're accelerating their electric vehicle rollout as well. They plan to be in 100 cities within this calendar year itself. So I'm going with green for Hero MotoCorp. For TVS Motor as well, the earnings were above street estimates. The margins are above 10% for the sixth straight quarter, and it's record high margins at 10.3%. And this says a lot at a time when they're seeing big exports slow down. To hold on to 10.3% margin is no mean feat. A revenue growth of almost 20%, core EBITDA up 22%, and profits up about 49%. Also, the electric vehicle piece is moving very well. So their cumulative EV sales has crossed more than 1 lakh units. And that's because of the TVS iQube, which has done exceptionally well. So I'm going with green for these stocks.
All right, TVS Motor stock will react, and those are earnings. Well, Tata Power is the next one, which reported earnings. And we have, by the way, the management joining us a little later in the program. But the numbers first. Vivek is here with exactly that said. Vivek, morning.
Well, good morning. Actually, when Tata Power reported its results, it's been a slight beat to what the analysts were anticipating. In fact, the revenues have come in, in line with what the street was anticipating, closer to the 12,450 crore mark. EBITDA, has come in almost 100 crores above what our poll was anticipating at the 1,930 crore mark. Margins too have come in quite steady at the 15.5% mark. And when you're talking about the net profit, the adjusted net profit had come in largely in line to slightly above what the street was anticipating. So expect some green on the stock here. However, there are a couple of worries that have emerged. The number one worry is the fact that coal prices, even in the call yesterday, the management alluded to the fact that coal prices have been on a declining trend. So the Indonesian JV profitability going forward will start coming down. However, there are some bright spots as well. The solar EPC order book is coming in quite strong. Almost 17,450 crore is the kind of order book that they're enjoying there. And, strong operational performance of the Odisha Discom. That too is a key highlight in the quarter gone by.
Okay, thanks for that, Vivek. Later today on Bazaar, we will be joined by the management of Tata Power to discuss their quarter gone by. So do stay tuned in for that. In case you have any questions from the management, you can always write into us on social media, on our Twitter handles, etc. And we'll try and take it forward. But Praveer Sinha, MD and CEO, will be joining us on the show. Let's also move forward and talk about Manappuram Finance. That's in focus. Abhishek is here to give us the latest on that. Abhishek, morning.
Morning, Sonia. So there is a release coming out from ED. As per that, they have conducted searches at 6 premises belonging to Manappuram Finance and its director VP Nandakumar. So ED is looking at money laundering allegations of funds that have been collected illegally by the Nandakumar or Manappuram group. So assets worth rupees 143 crore have been frozen by ED. RBI had detected this collection and directed Manappuram to return the amount to depositors. However, Manappuram had informed RBI that they have returned the amount, but ED findings does show that the claim there is no proof of repayment being done and no KYC of the depositors. So rupees 53 crore are shown as repaid in cash, but again there is no evidence is what ED has claimed. So ED claims that the proceed of the crime is diverted and invested by Nandakumar into immovable properties and his family members' name and into Manappuram shares as well. Earlier in the day, yesterday, Manappuram had given clarification that ED searches related to depositors accepted by Manappuram Agro Farm before 2012 is of amount of rupees 9.25 lakh, and Manappuram Agro had repaid the entire amount to the depositors. Back to you.
All right, Abhishek, thanks a lot for that. So the bad news continues. In fact, yesterday, post some clarification, the stock did spike up, but Abhishek's bring us his details and it could be back to the sell list today. Vivek, though, joins us to talk about the HDFC twins. Well, Vivek, the expectations really didn't come about. And today, instead of inflows, we're working with outflows now, post this MSCI announcement. Tell us more.
Well, absolutely right. It's a significant development as far as both HDFC as well as HDFC Bank is concerned. So in an overnight development, what has actually happened is that MSCI has said that in the merged entity of HDFC as well as HDFC Bank, in the MSCI Standard Index, they will be using an adjustment factor of 0.5. Now, what this indicates is that, there could be a likely selling of close to $150 to $200 million from the merged entity, once the merged entity comes into the MSCI Standard Index. MSCI has also said that they will be announcing more implementation details in due course. Now, while the quantum of $150 to $200 million is not too high in terms of the merged entity outflow, what will actually disappoint the street is the fact that the street was actually working in with the fact that the adjustment factor that MSCI will use to include the merged entity would be 1, and which is why, Nuvama Alternative Research had actually estimated that there could be inflows of close to $2.8 billion that could come about in the MSCI Standard Index. So now, instead of an adjustment factor of 1, the adjustment factor would be 0.5, which could lead to incremental outflows. Expect some pressure on both of the stocks today.
Okay, thanks a lot for that. So some pressure on the HDFC twins because of this. But Surbhi is joining in. She's tracking United Breweries and Blue Star this morning. Surbhi, how did it look?
Thanks so much for that. So United Breweries have reported a very weak set of numbers. They've reported a revenue of 1766 crores versus expectations of 1815 crores. Now, inflation pressure of barley and packaging material led to a gross margin contraction of over 1,000 basis points, came in at 39%. EBITDA was down almost 80%. So along with higher raw material prices, they have actually reported employee expenses which are higher than 35% when compared to last year, which has led to a further contraction. When it comes to margins, Q3 would have been the bottom for them, and that was the expectations. But Q4 margins are a negative surprise for the second consecutive quarter. Margins were down almost 1,200 basis points, came in at 3% versus 15% last year and an expectation of 9%. They have reported a volume growth of just 3% versus expectations of 7 to 8%. And this was due to market headwinds in Delhi and also changes in operating model in Tamil Nadu. Now, management in a statement has said that they expect the inflationary pressure to continue and they will seek appropriate action to further mitigate the impact. Next one is Blue Star. They have reported strong earnings and it was better than estimates. The revenue was up 16%. They have seen their gross profit margin expand by 300 basis points. EBITDA margin for the first time in the last 5 to 6 quarters have crossed the 6.5% mark, came in at 6.8%. Their reported PAT was, however, higher due to a one-time sale of profit. If you strip that off, net profit is actually down because of higher taxes. Now, when you look at internals, both the segments have reported strong growth. In their EMP segment, which is 50% of their revenues, they've seen a revenue growth of 10% and the margins have come in at 8% versus 6.7%. Management has said that they've received significant orders from railway electrification segment. And the unitary product segment as well, the revenue was up 22.3% and they've seen a margin expansion of 140 basis points. Now, management in its press release have also said that they've gained market share across all segments. So very strong numbers from Blue Star.
Thanks a lot for that, Surbhi. Well, Sonia, tell us about CEAT as well as Sundaram Fasteners. Both of those numbers look good.
They looked very good, and I think CEAT could be one of the stocks of the day. The numbers are really strong, and if you remember, MRF also posted very strong numbers, had a good stock reaction. So for the tire space, it's largely a margin-led beat that we're looking at because of lower raw material prices and operating leverage. Healthy volume growth as well on both year-on-year as well as quarter-on-quarter basis. Exports are now showing early signs of recovery, and that's very important because, export was a market that was suffering the most. The management says that the replacement volumes also recovered after a seasonally weak Q3. But what I really liked about the numbers is the margins. They've gone up 550 basis points year on year. The raw material cost basket has reduced by 8 to 9% and the gross margins expanded significantly. And, that led to the operational efficiencies, which led to a big pickup in EBITDA. But the other positive that the street may latch onto is lower debt. So the debt of the company has been reduced by 10.5% quarter on quarter, coming in at about 2,093 odd crores. The other stock we're looking at is Sundaram Fasteners. Very good numbers there as well. Going with green on the stock, 7.5% growth in revenues. Margins have improved to 15.5% and profit growth is also quite decent. So going with green on these two names. But here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow. There's Hero MotoCorp, TVS Motor, Tata Power, Blue Star, CEAT and Sundaram Fasteners. While stocks with negative news flow, HDFC, HDFC Bank, Manappuram Finance and United Breweries.